Hello traders, Jeff with OptionBoxer.com, back again with another video. Before we get into it, please know I'm not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security or attempt any options strategy or any options trade. Okay, so that out of the way, let's go ahead and look at what I have on the screen now is my OptionBoxer Analyze and Journal spreadsheet, and we're going to be utilizing the analysis portion of the spreadsheet today. For those of you that have purchased it, thank you, sincerely thank you. I'm very blessed that you have, and very thankful for you doing that. But I figured it would be it's probably time I start showing you kind of how I use it, and kind of what it's capable of. And in that regard, one thing you're going to find particularly cool about it is that the data will still pull over from Thinkorswim in the on-demand tool. And so you can still utilize several features of the spreadsheet, in this particular instance, the analysis tab, to kind of backtest the usefulness or the validity or viability, I guess maybe, of the analysis spreadsheet. And so the one thing you can't trust is the market internals, and then you'll notice that there is some data that won't pull in here, but the rest of it is relatively useful. And so the way I'm going to go ahead and use this spreadsheet, and I've already got the, you can see here in the background, I've already got the trades that I want to make set up. And what I've kind of called this is my vertical spread challenge. I don't know, since it's simulated trading, that you could really call it a challenge, but that's what I've got. And so here are the rules I'm gonna look at. So I'm starting on May the 31st of 2019. I think overall on that year it was a fairly bullish year, but I don't really remember what happened in May of 2019. That's been too long ago for me. But regardless, I just kind of randomly picked a day, and that's what we're going to go with. And so what I'm looking to do is I'm going to trade only vertical spreads. I'm going to use a mix of long and short vertical spreads. So you'll see here I've got the probability of profit, and I realize that's not a true representation of the probability of profit. I'm just using the probability out of the money and the probability in the money, since I can't use the Analyze tab to do the risk analysis that I would typically look at when I'm setting up a live trade. But that's good enough for for our purposes in this video, and so I've got that listed here. But if I set up a short trade, I'm going to look for 40 to 60% of the 40 to 60% probability of profit for any short trade, 70 to 80% probability of profit for any long trade. And the way I'm going to determine whether I make a short or a long trade is using the options analysis tab, which I've done. I've got it paused here so we're not missing anything. And so I've just gone here, and if it says, if the max pain is bearish or if it's bullish, I just traded the short spread in that direction. So for the sake of Bank of America here, it looked like it was bullish, so I traded a short bull. And then the long side, since I wanted to create ultimately a diverse grouping of assets, and particularly a hedged set of assets. And I know you're probably thinking, well, that's a little bit redundant. You're already managing your risk by trading a spread, and I realized that, but I just wanted to see kind of how it fared. And kind of the way I skewed it, so to speak, is on the long side, like I said, 70 to 80% probability of profit. So I traded in the money on most of those, and so you can see there's just not a lot of reward there on those long trades. So just looking to secure a small profit, and then I've got it broken down based on the entry price that I've already gotten filled on for these trades, and then the profit target I'm looking for. And then of course I'll put my actual exit here, and then we'll look at profit and loss, and then the commissions, and then the net P&L, just to see if over the course of these 20 trades, or I guess 17 trades, if I do in fact end up being profitable using this particular set of criteria. So what I'm looking to do, what these profit targets are, well, I guess the first thing I should say is every one of these is traded at 77 days. So I was trying to use approximately 60 days to expiration, but I found these, and they all had dollar-wide strikes, and they all had more than 60 days to expiration. So I'm going to look to capture a 25% profit in each of these trades. On my short verticals, I'm going to, if they don't hit the 25% profit target, I'm going to hold them till expiration. And any long verticals, I'm going to close them if they don't reach the 25% profit at 20 days to expiration. So I set these criteria so I can be fairly mechanical, and I'm not using any any of my own bias to close or keep a position open or any of that. While I did utilize the charts to look and see how favorable it was, primarily I used the directional analysis information here from the options analysis tab, and so it's almost entirely based on that. In fact, it probably is. I don't think I used the charts to make any decisions, although I did look at them, so you should know that. But that being said, we're going to see how over the course of these 17, so this is kind of, let's call this round one. I'll make another batch of trades here, as many as I can, using these tickers here. So if I close one, I'll look to initiate another one, then I'll of course log it. And I won't keep the video running for all of that because I feel like it would be pointless. But you can, I hope that you'll trust that I'm using the options analysis spreadsheet exclusively. There would be no reason for me not to, because that is the point of this video. But that being said, I think I've covered everything. And again, looking to capture a 25% profit. I will use my commission fees, which for a vertical spread, it cost me $1.30 one way. So $2.60 for commissions. So you can see the maximum profit potential is fairly low, considering that I'm only looking to capture a 25% profit. It would probably be more beneficial if I was looking for 50%, but for the sake of this video, we'll keep it the same because I've already done the math for the profit targets. So all that being said, I guess the last thing I need to say is that I'm hypothetically assuming, you can see where my cursor is now, I'm assuming an account balance of $1,000 because that's more realistic for most of us. And so you can just ignore the fact that there's 100,000 in my on-demand simulated environment. And so we're going to trade based on that and based on these criteria and see how it goes. So I'm going to pause the video, or actually I'll go ahead and click over to the monitor tab, and you can see I've got all those positions set up that I just discussed, and that are listed on the kind of the little spreadsheet that I made there. And we'll go through here and we'll see how it goes. So you can see I'm already starting with a loss because, if you've ever used the on-demand tool, you will have probably noticed that sometimes you attempt to enter a trade and then you have to, cancel and replace the trade and, lower the bid price or you lower the ask price, whatever it may be, and go from there. So that's why I'm starting with a small loss here, and we'll fast forward. I'm going to fast forward one day at a time. And I'll come back on the video, periodically as these trades become profitable, or if I reach the end of my trading period, either 20 days for the long options or all the way to expiration for the short ones, and we'll see how it shapes up. But hopefully that all made sense, and we'll go through this momentarily. All right, so after a nearly 2-month period, almost 2 months to the day, it turns out the strategy was particularly unprofitable, but there's a reason for that. So you can see on the whole, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 profitable trades, and only 1, 2, 3, 4, 5, 6 losing trades. So I guess the outcome of this was favorable, but it just goes to prove that you've got to be able to cut your losses at a certain point. So if we look at what we did here, I just hypothetically created this column here. We would have basically broken even if we traded the losing trades the same way we did the profitable trades. If we had set our profit or our stop loss at 25%, anyhow, if you had cut the losses at 25% on the short strike or on the losing trades, you would have basically broken even after you factor in for commission. So you would have finished with a $7 profit. However, had you done that, it probably would have changed some of these winners to losers, and possibly you know, these of course would have been losers anyway. So it's tough to tell from the back test whether or not overall it would have been profitable. The one thing that does, you know, this does confirm is you've got to be willing, like I said, to cut your losers fairly quickly. And so you can see the back test was both successful and unsuccessful. You know, from strictly from a win-loss standpoint, it was remarkable. I mean, I would probably want to flip, because I certainly don't want you to feel like this is a recommendation. If you, I mean, if you're enticed by this video to trade this strategy, then maybe trading is not your thing, because obviously this was a losing proposition. But if I were going to trade this in a real market, I would probably want to manage the risk reward a little bit better. And instead of you know, trading my short strikes out of the money, I would want to, or the short verticals out of the money, I'd want to trade those short verticals in the money and buy the long verticals out of the money. I think that would kind of flip this thing on its head, and really and truly, you know, if it were just an apples to apples, I'd be willing to bet that we would be considerably more profitable. But I don't have time right now. You can see the time on the clock. I still have a lot of things I need to get done here, but I think it would be much more favorable. So interesting video. Learned a little bit during, you know, through the process of this, but at the end of the day, certainly don't trade this particular way, you know, and expect to be profitable, because that did not work out. So you got to cut your losers short. But I do think, you know, I guess as a last note, I do think it proves that the options analysis tab is useful, because I used this and solely this for every trade. And you can see, you know, from a strict win and loss percentage, the wins far outweighed the losers. So manage the money, and you've got something you know, worth calling home about. But that's it from me. If you have any questions, feel free to reach me at OptionBoxer.com or Jeff@OptionBoxer.com, or here in the comments on YouTube. If you like the video, or if you like the content, please like and subscribe to the channel. It really helps me out. All right, appreciate it. See you later.